Welcome, everybody. Let's talk real estate. Your weekly BS with Barry Saywitz about the current commercial real estate market here in Southern California. As we take a no BS look at both sides of the issues driving this market today to find the best solutions going forward. With our man right in the middle, it's Barry Saywitz. Hey, Barry.
Hey, good morning, Paul, and good morning to all of our viewers and our listeners out there. If it's Tuesday, which I'm pretty sure it is, we are talking real estate. I am Barry Saywitz, president of the Saywitz Company and managing partner of Barry Saywitz Properties. And I'm excited for today's show because we get to talk about stuff that I get to talk about every day, and we've just brought it here in the studio. And so before we get going out there, I want to wish everybody a dry and safe and sunny week. I know we've had some bad weather here the last few weeks in Southern California, but we are going to talk some real estate. I'm excited to have our guest on the show, Andrew Herron from the Saywitz Company, who sits just down the hall from me in the office. Welcome back to the show. Thanks for coming on.
Thanks, Barry. Thanks for having me.
Yeah, so I'm glad I could twist your arm and bring you back in here, but I do want to talk about today's show is we're going to do an update on the office and the industrial leasing and sales markets here in Southern California and Orange County in particular, and I know that that is something that is right up your alley and you're dealing with every day.
Absolutely. Been doing it for years with you.
Yeah. So you were here, I don't know, I want to say it's almost 2 years ago, and we were talking about the market at the time, and things were much different than they are today. And now we're what I'll call past the post-COVID era, and we're on to whatever the next phase, I don't know what we'll call it, but this lead up to the election, high interest rates, and sort of an adjustment period in the markets, I guess is the best way to describe it. I want to break it down for our viewers and our listeners out there, and we'll talk about it in sections. And so let's start with talking about the office market. Everybody talks about the fact that, oh, people didn't come back to work, and there's all this empty office space, and the office market's in the tank. I'm curious as to what your thoughts are as we sit today relative to maybe a year or two ago.
You still got some high vacancy rates, and there aren't a ton of new users coming into the marketplace because lots of people have figured that this work from home thing works, right? So you see reductions in footprints, less new active tenants in the market, and less construction going on in the market.
So really almost no new construction because people cut off the spigot, and then we have had other people here that are CEOs of businesses, and everybody talks about the fact that everybody's trying to get their folks back to work. I think that the businesses that where they can make it work with either a hybrid model or people can work from home or some of the people can work from home have done that. And then I think that now you're starting to see a lot of these employers really, bring their employees back to work and start to grow again. Are you seeing, and what are you hearing from, business owners and CEOs? Are they more settled in the kind of space that they need and comfortable with signing, longer term leases?
I don't know if they're comfortable signing the longer term leases yet. I think they still think that the market's going to continue to soften. Where realistically, you've got the sublease space that's kind of gotten gobbled up because that is a bargain. And then you've got space coming back to landlords when leases have expired. So you still have, a fairly large vacancy rate for office space.
So what is the vacancy? I mean, if we're talking Orange County for a second, give us an idea of what the vacancy rate is for office space.
A year ago it was, plus or minus 17% in Orange County and around the airport area. It's decreased, down to about 13.5% in Orange County. The airport submarket and the Irvine submarket's still, right around 16, 17% as well.
But overall, the numbers have come down, which would tell you that some space is getting gobbled up, and the market is at least past what I'll call the bottom of the market and maybe on its way back to recovery.
Yeah, I think that's a good statement. I think it's true.
And so when you meet with people and you talk to them every day, is it better for me as a business owner if I have an office lease that's coming up in a year? Should I just wait? Am I going to make a better deal a year from now, or should I really jump on it and try and figure something out sooner rather than later?
Absolutely start early. Always, the more time you have, the more power you have to negotiate. And I think in a year or so, when people are coming back to the market, you're going to save money today if you can lock into a rate today.
Yeah, to me, I think the worst is behind us, and I think that you will make a better deal today than you would make a year from now. And I think that if you start negotiating with your landlord as a tenant, The worst that could happen is the negotiations drag out a little bit, and you can pick and choose when you need to make a deal. But the perception, I think, for both landlord and tenant of what tomorrow brings really sort of dictates what happens in the market, right? As a landlord, if I felt like tomorrow's deal would be better for me than today's deal, I would wait. And as a tenant, if I felt like the market was still softening and going down, I guess I would wait too. And your job on the brokerage side is really to try and get people to understand where the market may be heading and whether it's in their best interest to do something or not.
Yeah, absolutely.
And so how do you find that in terms of a challenge? I mean, you get pushback from the owners and the CFOs and the CEOs of companies saying, hey, I'm just going to wait? Or is it really, hey, once they understand the dynamics of the numbers, it makes sense to start early?
Yeah, you have to explain what's exactly going on. Information's key. If they think that they can get a deal today, I think it can't hurt them to try, right? As you said, if it's going to stall out, it'll stall out. And if you can cut the deal now, you're going to save some money.
And so what about for the guy who's out in the market looking around? I mean, there are options. I mean, there's no questions that there are options. But I think what we found, and we kick around in the office all the time, is once we start applying the criteria of different kinds of space, whether it's low rise, high rise, free parking, I need this kind of space, I need more open space, the list starts to get narrowed pretty quick, right? And so while I might have 20 or 30 things to look at on a list, after I start narrowing it, maybe I've got 4 or 5 or 6. It's not as bad as you think.
Real options, right?
Yeah.
They check all the boxes.
And so then the issue becomes, okay, so I'm back to this perception where the landlord will do whatever work, I want him to, and remodel the space because the market is softer than it was. And what has your experience been with that? I mean, are landlords really willing to spend all this money and just gut the space, or they really rather make a deal with somebody who needs less work, and I'll make you a little better deal if you can take it more the way it is?
Yeah, if you can utilize the existing infrastructure, it's going to save everybody money. You, the landlord, and which leaves room for more free rent, lower front end rental rate. You'll get more perks if you can do less work.
And are you finding that some of these landlords are doing what we call spec suites, where they're building out the space and they're making it ready to move in, and then they go, here it is, it looks very nice, rather than trying to get somebody to visualize some old beat up space?
Sure, because you can get somebody in there the next day if it's a spec suite, right? If you've got to go through the build out of the tenant improvements, you've got to permit it, you've got to design it. It's not tomorrow money.
Yeah, and I mean, are you also finding that when they go out to bid for the construction numbers to do the renovations, the numbers are high, right? I mean, things just cost more money today.
Much more expensive today than it was 5 years ago.
Yeah. So, I mean, I think you tell me, I don't want to put words in anybody's mouth, but rule of thumb would be if I can find space that requires less work and I'm ready to move sooner rather than later, I will make a better deal, and the landlord will be more excited to make one with me.
They absolutely will. Yes.
And on the renewal scenario, so if I've got a lease that's up in a year or 18 months, do I wait?
No, you go today. At least address the situation today. And, it might be too early to look at other options in the marketplace, but the landlord can give you the most aggressive deal if they want to today. And they definitely don't want the space to go vacant because they don't know who's going to take it tomorrow.
Yeah, and I mean, we tell people all the time, look, your current landlord has the capability to make you the best deal out there. The question is whether it makes sense for both parties to do it, right? And so while you can't pick up your toys and move down the street if you have 18 months left on your lease, you can restructure your lease, and it may be worth it for both you and the landlord to do that. So if you need some improvements or some spruce up to your space, maybe the landlord's willing to do that sooner rather than later, to lock you in for a longer lease term. The benefit to the landlord is I get this longer commitment from you. The benefit to the tenant is I get my space tuned up sooner rather than later. And if you're the tenant, you are theoretically locking in at the bottom or close to the bottom of the market. So if you are able to sign a long-term lease, you're going to be better off at the end of the day, don't you think?
Yeah, absolutely.
And so, look, real estate goes in cycles, right? So the rents will go up on the office side, and there is no new construction, and rent is driven by supply and demand. So if a year from now vacancy is less than 10%, you will start to see rates jump up, I think.
Yeah, and 10% is the barometer. When it's above 10%, it's truly a tenant's market, right? And when you've got vacancy rates, hovering, 13, 14, 15%, you're definitely going to get a deal if you started early.
Yeah, I think it's all a relative term, but if you're looking to take advantage of the window, it seems like that would be the window. And then I guess on the flip side, on the purchase side of things, we have all kinds of clients that want to buy a building. People go, hey, I want to buy a building. I have money. I want to buy a building. This would be great. Now you have interest rates that are double what they were or close to it. So the cost of the mortgage gets pushed that much further away. It's more expensive. Combine that with the fact that rents are lower. So now the disparity between if I bought the building and had a mortgage or I paid rent and I just had a rental payment, there's actually a pretty big spread. Whereas before, with lower interest rates and higher rental rates, I could own a building almost for the same price as renting. So what do you see from the people that used to say a year or two ago with lower interest rates, hey, I want to buy a building? They still want to buy a building?
Everybody wants to buy the building, but I think once they look at the cost of buying the building, they usually revert back to leasing, just because of the down. You've got to come down with more than 10% today typically. If you're looking at a conventional loan, you're looking at 15 to 20%.
It could be 25%, and then you have to come up with the improvements, right? And so unless you're going to get an SBA loan and roll that in, you as the owner of the building or the new owner will have to remodel the building at your own nickel. Versus if you can get the landlord to pay for the improvements on a lease, you don't have to spend any money. You just got to move in.
But if you have cash, there are some deals out there.
Yeah.
So if you're an all-cash buyer in this market where you've got sellers that want to get this off their books because they're hesitant about the future of the office market, now is the time to go look.
And then I guess the difference is, look, if I signed a long-term lease and was able to lock in, there's no reason for me to buy, because if I could lock in at a price that's less than the mortgage from a cash flow, unless I really want to own the building. But from a numbers standpoint, right, when you run the numbers on deals on a daily basis, it's always much more expensive in today's world to own the building than it is to lease it, right? So that's the difficulty.
Yes.
But I guess I would ask, end of the year, is the office market better than it is today?
Today, it's better than it was yesterday.
And tomorrow, I think, will be better than today, right? I think it's a slow go, but I think it is a movement back up, right? And I think what we tell folks in the office and when we're meeting with them is, you should start to look at it right away.
Absolutely, I totally agree.
All right, so let's shift gears a second to the industrial, right? And so on the industrial side of things, I would say throughout Southern California, I don't care whether it's Los Angeles, Orange County, San Diego, Inland Empire, any of those regions, industrial market tight, right? I mean,
yes, 2%, 3%, still totally a landlord's market.
And no new construction really, or very limited new construction, because just limited opportunities out there to be able to build.
You've got some new construction that's taken place that took place during pre-slowdown is what I'll call it, where you've already got the construction that started, where you've got some large big boxes, still coming out in the Inland Empire. But as for Orange County, LA County, very limited.
And the stuff that they're building is really not small and middle-sized buildings. It's very large buildings, because that's how you get the economies of scale, right?
Yeah, 200,000 to 1 million feet.
Yeah, so if I need 20, 30, 40, 50,000 square feet, there's no new buildings for me to buy or rent. I have to find a building where somebody else moved out, and then I have to go get it.
Absolutely right.
All right, so here's my question. If we rewind 12 or 18 months ago, the market was 1%, 2% vacant. You had 10 different people looking at an empty building when it would become available. Landlord would make up a number and somebody would rent it. Landlord would tell you no free rent, no improvements, no nothing, just take the space. If you wanted to take it 6 months from when you were looking at it, the landlord would say, forget it, I need you to take it next week or next month.
Yes.
How is that today? Has it changed?
It's definitely slowed. The want for the building is less and less. You've got less takers. The line is much shorter.
And why do you think that is? Is it a general slowdown in the economy?
You've just got some negative net absorption in the last 12 months, where some of these smaller buildings are coming back on the market and they're sitting longer because these asking rates are still very, very high.
So do you think part of it, like a guy who was paying 60, 70, 80 cents a square foot on a monthly basis, all of a sudden his lease comes up for renewal and you as the broker have to explain to him, hey, guess what? Your rent's going to double or more.
Do it on a daily basis.
And so those are tough conversations to have, especially you make sure the guy's sitting down when you break it to him, right?
I've had grown men cry.
Yeah. And so is part of it then you think that some of these companies just can't afford the new number because it goes right to the bottom line, and somebody who was barely making it before had a small margin, this could sink them or send them upside down, so then they have to look at alternatives.
It's definitely the case. You've got that's causes the negative net absorption that's going on.
So in today's world, are there 10 people looking at the building?
No, there's a couple, and they're not going to make a decision because they've got 3 or 4 to look at.
So I'd ask the same question about the industrial side that I would ask you about the office side, which is if I'm a tenant and my lease is up in a year and I'm going to go out and look at options in the market, I don't think anybody will rent you space for a year from now, whether it's office or industrial. But if I'm trying to understand what the market is, do you feel like the industrial market will be better for me as the tenant tomorrow or next month than it was last month, in the sense that there might be more opportunities, there might be a landlord that's a little more willing to make a deal with me, and I might get a few more concessions than I got before?
You may, but I think you should definitely start talking to your existing landlord if staying is a possibility sooner than later, just same way as in the office market.
So no different in concept.
No, you want to start the process early.
But I guess I would ask, so in the industrial market, while a year ago there was 0 free rent, 0 concessions, now aren't we starting to see where we're able to get people some free rent, and we're able to get people improvements, and landlords are willing to do it because in a normal market that's what they would do anyway?
Absolutely right. Yes.
Right, and while rates are still higher than they were historically, they are at ridiculous numbers on the industrial, there are kinks in the armor.
There are. You had 10, 15% annual growth 2-3 years ago, and now you've got that annual growth that's kind of plateauing at 3, 4, 5% annually in the last 12 months.
And annual increases are not as big as they were before. Obviously, with inflation, you had inflation at 8 or 9%, so you had landlords saying, hey, even if your increase was at 5%, that's still less than what inflation is doing. Now inflation's theoretically come down, and so you see those kinds of expectations long term also come down a little bit as well.
Yeah, a couple of years ago, you'd had landlords pushing CPI increases even when CPI was at 8, 9%. Now you've got CPI that's back down to 2.5%, 3%. So I think we're seeing those annual increases plateau. 4% has been the norm over about the last 12 months, and we're seeing landlords making concessions for 3.5, even 3% annual increases on longer term leases.
And so in terms of a landlord's willingness to want to keep the tenant, I mean, is the concept still not the same?
It is. Nobody wants a building to go vacant. You've got negative cash flow.
So if you're a good tenant, you pay your rent on time, you have good credit, you should still be able to make a decent deal.
Absolutely.
It's all relative.
Yes.
So how is it that you're able to create the leverage to be able to get the tenant a better deal, whether it's the current landlord or whether it's a new landlord, so that they're not leaving money on the table?
Well, the landlord, your existing landlord, has to believe that there's the possibility of you leaving, and that's the leverage that we create when we go to negotiate for a tenant. Simultaneously, we're also showing our tenants every option that's available in the market. If I can get a landlord offering 2 or 3 months of free rent at a rate that's lower than the existing landlord, then just use that as leverage to add value and save money.
And in terms of the existing landlord, like, why would I want to deal with it a year before it's up, unless I felt like the market might not be as good as it is today?
Because you still don't want that tenant to leave. So why not lock them into cash flow today and not worry about it, when you get within 4 or 5, 6 months of lease expiration? Some landlords, still wait until you're 6 months out because they think they've got you to start negotiations. But if you can start the process early and let the landlord know that, hey, we're not going to wait until we're 6 months prior to lease execution or lease expiration, we're going to go find something else.
And concept's still the same on the industrial side, that the less I spend on the space, whether it's new or existing space, the better off I think everybody is.
Sure. Lower front end rental rate, more free rent, etc.
And how difficult is it for tenants that are out there that have special requirements like power or extra loading or a larger yard? Doesn't that add another layer of sort of complication to finding a building that would make sense for them?
Just less available product. That's why you need more time to find it.
Right. And I mean, it seems like you have the same thing on the office side. So when we were talking about, hey, I need low-story building. I need free parking. I need these special sort of filters that fit my business. On the industrial side, I need a higher ceiling height, or I need a bigger yard, or I need more docks, or what I need close to the freeway. Then it also starts to narrow down the realistic options that would be a realistic alternative for them.
Yes.
And so, what advice on the industrial side are you telling people? I mean, is it the same?
It is. I mean, the more time you have to identify those available properties, the better you are. Let's get a market survey put together and then, scour the market and can confirm which ones, check all the boxes for your use.
And I would say on the industrial side, it's the same concept, which is if you have yesterday's rent, while you may be getting a shell shocker of a new number, which would be significantly higher than what you were dealing with before, the issue then becomes whatever number the landlord gets is going to be dramatically better than what he was seeing before. And if he doesn't have to spend money or have exposure to do it, he should be willing to take a little bit less than going out to market and get something else.
And locking that deal in sooner than later, and because it's in everyone's best interest at that point.
Yeah, and I think that gets back to, look, if I have a good credit tenant that I know is going to pay the rent, then that's better than making a deal with a shaky tenant that I might be concerned about.
But there is a misperception out there in terms of rental rates. Many tenants believe that rates are dropping, and they're not dropping. They're just not increasing as much as they had in the past.
And so the concept that each deal is more expensive than the last, isn't that in fact out the window to some degree? I mean, so it's not, right? So I guess the issue is, if I'm the landlord, I should make a deal today on the industrial side, because I don't feel like tomorrow's rate will be higher. And if I'm a tenant, maybe I wait, or maybe if I make a good deal, I take advantage of it.
Sure, it's the tenant's choice at that point.
And in terms of the desire to buy industrial buildings, are you still talking to owners and CEOs who say, hey, I'd like to buy a building?
Sure, but not as much as I had in the past, just because the prices are not what they were 5 years ago. They're double the price.
And same concept, which is I got interest rates that are higher,
Right?
and I got limited options,
Less buying power,
and less options out in the marketplace to buy versus lease. While the leasing is limited, buying might be even more limited.
it is.
Yeah. And so, do you see a difference in LA County versus Orange County versus Inland Empire or San Diego? I mean, is it really the same concept across the board?
Same concept wherever you look. It's the more time you have, the more options you can find, the more proposals you can put out there and use those as leverage to create better deals.
And so, from the standpoint of structuring a deal, since you're managing expectations out every day in terms of landlord and tenant, how difficult is it in today's world to get two people on the same page to try and make a deal? It seems like there's a little bit of an education on both sides.
There is. The key is the information, right? I'm an information provider. Yes, I'm a commercial real estate broker and get paid a fee, but at the end of the day, I'm a consultant. I'll put together a full report as to what's going on in the market today and what's been going on in the market, and then come up with the buildings that'll best work for your use, and then let's look at those buildings and see, what kind of deals we can cut. And if it's better than the existing landlord, let's go back to the existing landlord and see what they're willing to do.
And so what happens? You run a financial analysis that basically compares all the different options?
Sure, it shows the landlord what could happen if the tenant were to leave the building. There's negative cash flow, there's downtime, there's more tenant improvements, etc. Nobody can utilize that building exactly the way that the existing tenant does, and the landlord's going to have exposure.
And so from the standpoint of emotion, right? We talk about all the time, people buying a house, they get emotional, right? I like the curtains, I like the carpet. Does commercial real estate get emotional?
It can, but typically it's about the dollars. It's dollars and cents at the end of the day, right? If you're dealing with a savvy CFO that understands that moving, if it's a better deal for the company and it's going to affect the bottom line, then they'll absolutely look at that option.
It's
right?
still moving a pain in the butt, and still
It
costs
is.
a bunch of money, and still disruptive to the business.
Right.
So that has to get weighed in as well.
Yeah.
And in terms of so as far as short-term versus long-term lease, I guess let's talk about that for a second. What are you telling people?
Let's look at both, right? Let's see what the value is that the landlord's willing to give you for locking you into the longer term, right? On a longer term lease, are we able to get, a lower front end rental rate? Are we able to get more tenant improvements if needed? Are we able to get some free rent? to incentivize the tenant to sign the deal now, right? So let's look at the longer term. I always say let's look at the longer term deal first. And if you don't like it, we can always cut it down to the shorter term deal. I just don't think you're going to get as many bells and whistles, with the standard shorter term deal, unless you're forced to. If it's the shorter term deal has the higher annual increases, it's got that higher front end rental rate, let's consider a 7, consider a 10-year deal.
And so isn't it it's really a function of, look, sign as longer term leases you feel comfortable with, that fits with your business, right? The real estate doesn't dictate the business will dictate the real estate decision. At the same time, if it's better to sign a long-term lease, number one, I'm locking in for a longer period of time, good or bad, depends on what the deal looks like.
Right.
Number two, if I get more concessions for doing a longer-term lease, it may be worth it. If I really just can't see where my business is going from a growth perspective, or I have other issues that don't really allow me to sign a long-term lease, then I guess I default back to the shorter term.
Absolutely.
So it sounds like information, right? Leverage, plan ahead, right? Hire somebody who you trust that is knowledgeable, that can help you. Those would all be key concepts if somebody was out in the marketplace looking to do something with their real estate.
And I'd advise, don't try to do it on your own. When you go talk to the landlord directly, you lose all leverage, because the landlord knows a couple things that you're probably not educated on the marketplace, number one. Number two, you're probably not going anywhere. Number two, because if you were, you would have sent your broker in.
Well, and I guess the other thing we talk about all the time is you wouldn't go to court and represent yourself, right? And you're making a business decision that's going to impact your business for years to come. So if you mess up, or if you leave money on the table, or if you're not doing whatever it is that you're doing properly, then you've really wasted the time and the effort. There's a reason people hire an attorney to go to court for them. There's a reason people hire a CPA to do their taxes for them, right? There's a reason that there's professionals out there, and you should use it. And in the case of a commercial real estate broker, it doesn't cost you anything because it's part of the lease anyway, and the landlord pays the fee. And right, wrong, or indifferent, that's how it works. And so you should take advantage of that and have someone on your side that's going to help you and add value.
And the majority of the time, the landlord has their own representation. So why would you want to work with the guy that's hired to make the landlord the most money, right? Why wouldn't you want to have your own assistants, if anything else, to come in to help save you time and save you money at the end of the day?
Yeah, I think a common misperception is, I can go on the internet and I can figure out what the market is, and then that makes me an expert. Or I sold my house and made some money, so I'm an expert in real estate. Or
I'm going to save money by not having a broker.
Right, which is the biggest misconception there is, right?
Yeah.
And then all you've done is set yourself up for failure. So I guess the word of the day would be get professional advice, get good professional advice. And if it's not the Saywitz Company, find somebody that you feel comfortable with that's going to help you and add some value. So, Andrew, I appreciate you coming on the show. They're waving at me saying it's donut time and we got to move on. But how can people find out more information about the Saywitz Company? What's the website?
Check out our website, www.saywitz.com, and it's got broker bios as well as, I'm sure, media clips of this show.
Yeah, no, we'll air all kinds of fun stuff there, and then there's free giveaways, right?
Every day.
Yeah. So good. Well, listen, I appreciate you coming on the show and sharing your thoughts on the market and the process and what's going on, and much continued success to you. And for selfish reasons, much continued success for the company. And we'll have you back here again at some point down the road. We'll keep checking on the market, and I'm sure it'll change, and I'm sure it'll evolve, and appreciate all your input. Thanks for coming on.
Thanks for having me, Barry.
Yeah. So I am Barry Saywitz, president of the Saywitz Company. It is Tuesday. We are talking real estate. We'll be back next week. We'll see you here next time on Let's Talk Real Estate.
Well, there you have it. You've been listening to Let's Talk Real Estate, your weekly BS with Barry Saywitz about the current state of the real commercial real estate market right here in Southern California. On Orange County's only community radio station, OC Talk Radio, streaming live from our studio here at the University of California, Irvine's Beale Applied Innovation Center.